Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today we again will take a look at the gold market. Well, to be honest, the gold market right now looks a bit boring because it seems that investors by themselves can't choose the direction. So mostly this is the indecision sentiment from the investors, because as you can see in the last couple of weeks we've got really significant events. So this was the Yellen speech in the Wyoming, then we have got the poor non-farm payrolls release, poor ISM index. So even these events, although they were a bit contradictional, but they can't shake the market. They can't push market in one or other direction and help market to choose finally some direction. And it seems that investors do not know what to do currently. So they just sit on their hands and keep long positions on the hand, because based on the commitment of traders report, yes, we see some decrease in the open interest and the net speculative long position, but this decrease is not sufficient. This is not the massive decrease. This is just some minor decrease, so that the overall long speculative position stands around the all-time high. So any downward action that has happened in the recent couple of months wasn't able to trigger the massive closing of the longs position and taking the profit by the investors. So any action that has happened to the downside wasn't able to trigger new bearish trend on the daily chart. And this leads particularly to this a bit boring behavior on the market. So market stands in the tight consideration. In reality, it's moving, in fact, nowhere. On the weekly chart, guys, as you know, we previously had potentially two patterns. That was the stop grabber and the potential butterfly. So both of them have been vanished by this recent drop to the 1305, 13 even area. At the same time, weekly chart looks a bit contradictory, because from the one point of view, yes, we have the bearish divergence with the MACD around monthly resistance on the weekly chart. We have the erasing of these bullish patterns. But at the same time, guys, all this action, if you will take a look at the weekly chart, looks a bit choppy, very slow, and mostly is typical for the retracement. If you remember here, at this top, market has completed major 618 target of the ABCD pattern that has started in the January. So that is the minor target has been completed, minor extension, 618. But this is a really big pattern, big ABCD. And maybe this action is just a retracement after the completion of the minor target, because overall action doesn't look like some reversal or something of that sort. Mostly it reminds some pennant consolidation on the weekly chart. The problem still is that long positions on the gold market are overloaded, and market just has no capacity to continue move higher. So it is possible to show some spike up, some minor upward action, but currently it seems impossible that market will continue the real long-term bull trend to the upside, because it's just no money for more purchasing on the gold market. So positions are overloaded on the long side. That's why market needs to offload these positions, and usually it happens on the deep retracement. And technically, this retracement should happen. I mean, on the monthly chart, we have talked about it very often last time, because the upward action to the 1380 is the first upward action after long-term bear trend, and usually deep retracement happens after that action, and we are waiting particularly for that retracement on the long-term charts. In the shorter term charts, guys, on the daily chart, as you can see, we have the mixed results of the last week. So From the one point of view, our setup on the Judd Napoli failure triangle breakout failure has happened perfect. So you can see how nice this invention of the Judd Napoli that suggests that if after some below some pattern, in our case this is triangle, stands very strong support, usually the market shows the failure breakout, and this indeed has happened. So take a look. Market has completed this A, B, C, D down right inside the confluence support on the daily chart in agreement. As soon as target has been hit, market immediately has reversed up and returned back inside of the triangle body. So this is failure breakout. Potentially this looks like this is in general bullish sign, because failure breakout usually leads to the normal breakout in opposite direction. Also, this could be treated as some kind of the wash and raise of these lows. But overall action, guys, looks of course too choppy and the blur, and it's really not very fascinating view right now on the gold market. That's why, still following the technical analysis, we could say a couple of things. So first is that probably we still should stand aside from the bearish positions, because we just have no bearish context for the trading to the downside right now. Market has shown the failure breakout of the triangle. It means that it's mostly the bullish side. That's why we could return back probably to discussion of bearish trend and taking the short position only if market will break this confluence support to the downside. This will be important moment, and only in this case we probably could talk about some bearish positions. Right now, all that we could do is just to be focused on some minor tactical steps. This is not very interesting, but guys, this is the reality. So sometimes market stands in such action as we see on the gold market, and you also need to experience how to deal with these markets, and sometimes you have to work with such markets. Of course, everybody likes when the trend exists in the market. It's just simpler and brings more profit to the traders. But sometimes period stands when the market stands in decision and the complex situation in the fundamental sphere and in the technical picture. So that's why probably currently all that we could do is just to be focused on some minor tactical steps in the gold market and see for some moments where market indeed will choose the final direction. And that being said, right now probably we should forget about the bearish trading and to be focused only on the bullish side. For example, on the hourly chart, guys, we see that on the way up, market has completed minor hand and shoulder pattern that has been formed Friday. So we talk about, as you can see, 1618 target has been hit around the monthly pivot point. Right now, maybe some minor retracement should happen on Monday, on Tuesday. On Monday, probably market will be closed due to the Labor Day celebration, but on Tuesday, some retracement probably could happen. And here, market could form another hand and shoulders with larger scale, so that could become the shoulder, head. It's another shoulder. So here we will be watching for some 1340, 1315 area, this potential bottom of the right shoulder, and see for reversal, upward reversal patterns here. If we will get any, well, maybe we will get some minor ABCD set up to the upside. Currently, guys, nothing more. So on the gold market, just tactical steps that will leave for 1-2 sessions maybe, until market will choose finally the direction. Although this is not maybe very interesting, but this is, guys, as things stand. So this is your reality. So that being said, in the gold market, we're continuing to watch for some major breakout, waiting for that. Maybe some fundamental events will make the impact on the gold market in the future. But right now, we will have to deal mostly with the short-term tactical step on intraday charts.